Overlapping Fibonacci levels happen when we have, when we can find two or more different Fibonacci levels occurring at the same price levels using different swing points but a common anchor point. Ooh, now what the heck does that mean? I know that sounds a bit confusing, but it's really not. And an illustration will clearly show you what we mean. This is what an overlapping Fibonacci buy setup looks like. And as you can see, price is swinging higher from A up to here, up to this point R, down to B, up to X, and back down to C. Point X is what we would call the anchor point, and that's as high as price was able to go. You see that? It couldn't get anywhere past this point X here, and we can see that from point A up to point X we had a 38% retracement that came to this point C right here, okay? And then if you measure from point B up to point X, this was a 79% retracement. From B up to X is 79% down to point C. And from A up to X, we have a 38% retracement also happening at point C. So we say we have overlapping Fibonacci levels. Okay. Now I'm just showing you an example here where the 79% and a 38% overlap, but this could be any combination. Okay, like a 62% and a 38%, or a 50% and a 79%, or a 62 and a 79%. You get the idea. We're looking for different Fibonacci retracement levels that match up at point C by measuring from different swing lows, okay, B and A, or wherever lows that we have back here, up to this common high at point X. But here's the cool thing about this. We start measuring, like as soon as price starts to move down from point X, we can start measuring from these known swing points up to point X. And so before price ever gets to point C, we'll know in advance about the possibility of overlapping fibs happening down here at point C before price ever gets there. Now this is one of the patterns where we usually don't use a noble entry necessarily. You can just simply put a limit buy order in at point C with a stop of about a 20 pip stop, 20 depending on the volatility of the pair. Now you could use a noble entry here, of course. Okay, you just wait for price to come down, hit point C, and watch for a noble entry to form right in here. Another thing to know is that when you get overlapping Fibonacci's, you'll generally want to see that there are other factors telling us that we're at a support level, in this case a support level. And that's things like pivots, or maybe an external retracement, or of course an old level of support or resistance that matches up at the very same place is very good. And don't forget to see if the support or resistance level, like this point C in here, or this level in here, happens to be the figure. That would be really nice too. In this case, notice that as price rallied up from point A up here, it hit this resistance at point R. Then it went down to point B, then it went up to point X and came down. Point R, because it used to be resistance, can now be expected to become support down here. And so the fact that it lines up with these overlapping Fibonacci levels makes it particularly strong. Now, okay, I've nice, hand drawn the lines in to match up real nicely and neatly like this, but believe me, if you look for these, you'll find these situations setting up. And in fact, I'll tell you something else that happens. Usually the move down from X down to C doesn't go straight down the way I've drawn it. It goes down and it goes up and then it goes down. And quite often this little zigzag on the way down, you'll find a Fibonacci extension that happens at point C, or an external retracement in here that also comes to point C. So you can watch for those as well. Another important thing to note is that by the time point X is reached, if price has traveled beyond its 5-day average daily range, by the time it gets up to here, you might want to pass on the trade, just because the likelihood of a further move up in price becomes diminished. Okay, now it doesn't mean that it can't happen, of course. It's just that the odds aren't as great. You can kind of quite often get a little better gauge on it by observing what the trading environment's like. And when you're just starting out, don't worry about passing on trades that have already exceeded their 5-day average daily range. There's enough other good trades out there to keep you busy. So don't feel like you have to try to get every single trade. Just make sure go for the good ones. Okay, and an overlapping Fibonacci sell is just the opposite. Okay, you can see I've drawn just the opposite. A goes down to this point S where we get some support. It bounces up to B, down to X, and then we have the overlapping fibs from A down to X up to this point C. Okay, that's a 38% retracement, and then from B down to X, we get a 79% retracement to this level right in here. And this used to be support. It gets broken. We can now expect it to become resistance. Okay, and again, there can be these. I've just drawn this to have a 38 and a 79% overlap, but you can, as I say up here, point C can be other Fibonacci combos besides 79 and 38.